There are two things farmers love about selling land, and one thing they absolutely hate. Taxes can eat up a huge chunk if you don't plan ahead. I've seen too many deals where sellers got blindsided and it cost them big. If you are thinking about buying, selling, investing, or relocating in Saskatchewan, send me an email. My info is in the description below. You've likely heard horror stories about farmers getting slammed by taxes. The truth is, it's not just about what you sell for, it's about what you keep after taxes. Full disclosure, this is not tax advice. Definitely reach out to your accountant, but this is what I've learned in my experience in real estate over the years. And even if you're not ready to sell yet, knowing this early can save you tens or hundreds of thousands of dollars. If your land has increased in value, which it probably has, then you may owe capital gains on the profit. Now, this applies to land that is not your primary residence. Many farmers underestimate how much they owe until it's too late. And if not planned properly, you might lose access to this $1 million exemption that there is in place. It must meet specific conditions, it's not automatic, and some think they qualify but don't. It's what's called the lifetime capital gains exemption. Now, GST may apply if you're registered or if land is used commercially. Mistakes here can delay the deal and cause unexpected liabilities. It must be properly handled in the purchase agreement and the title transfer. If you pass away before selling, your heirs may inherit a huge tax headache. If there's no succession plan, the land gets taxed as if it was sold. It's better to plan now than to leave a mess behind. If sale proceeds hit your personal income all in 1 year, it could push you into a higher tax bracket. You can, however, structure deals to avoid this. The lifetime capital gains exemption is the most powerful tool for Canadian farmers. It can shelter up to $1 million worth of gains on qualifying farmland. It must meet the qualified farm property status, so check with your accountant and your lawyer, and it applies on sale, gifting to family, or succession. You could spread your gains up to 5 years if structured properly. It reduces your annual tax hit and keeps you in lower tax brackets. And it does work well with vendor financing or staged payments. Spousal rollovers and trusts can spread gains across multiple family members. Each person can use their own LCGE. It does require legal setup, so make sure that you plan ahead. If you sell to a family member, it can preserve exemptions while passing the land on to the next generation, but it needs to be structured carefully. CRA will scrutinize undervalued transfers. Now, this keeps the land in the family, reduces tax, and sets up a smooth succession. You could sell in pieces, avoiding large one-time tax hits by selling portions over multiple years. Now, this will help with cash flow and estate planning. It's especially smart with large land bases or mixed-use parcels. But you gotta know what you own. Confirm full legal title and ownership structure. Check for jointly held land, corporate ownership, or co-ops, and know if your land qualifies for LCGE or what needs to be done for it to qualify. Get a professional market evaluation. If it's too high, CRA might ask questions. If it's too low, you might lose money. And it helps your accountant plan for capital gains and exemptions. Sit down with a farm-focused accountant, not just any accountant. You need someone who knows ag rules. Bring your titles, previous tax returns, land use history, and ownership records, and ask them to map out your estimated tax bill before listing. Involve a lawyer early, especially if trusts, rollovers, succession planning are involved. Lawyers can help with legal structure, title clarity, and CRA compliance. Waiting too long can cost you. Even one mistake can trigger unexpected taxes. And get an exit strategy in writing. Who gets what? How and when is money received? What tax applies and how's it being handled? Because clarity avoids conflict, especially with multiple heirs. Now, as I'd mentioned, vendor financing can spread payments over years. It gives you a steady income and can reduce your tax exposure, but it needs a written agreement with legal protection. If land is owned by a corporation, selling shares may be tax advantageous, and a share sale may allow full LCGE use. It does require buyer alignment and legal setup. Selling the home and the land together may limit some exemptions. Separating assets allows you to shelter more under the primary residence exemption. And equipment should be sold separately for cleaner accounting and tax reporting. Now, how I help landowners. I don't just list, I help you build a plan first. I coordinate with your accountant and your lawyer early to avoid surprises. And I can set up a custom strategy based on your life. Selling a full quarter or 10 sections, I match the sale plan for your retirement or estate or family goals. You stay in control, I just guide the process. And proper pricing helps you claim correct value for your LCGE and your CRA records. And high quality marketing brings in strong offers, which gives you leverage in negotiating favorable terms. Whether you sell now or later, this process works better when you start early. I help farmland owners position their land properly to protect their net proceeds. If you are thinking about buying, selling, investing, or relocating in Saskatchewan, send me an email. My info is in the description below. And don't forget to like, comment, subscribe, and I will see you on this video next.